Hey, it's Matt Canner here with homesforsalesupersite.com. You know, in today's world, people have been losing money more than ever, and so we want to share with you something today that can help you create some wealth and actually help you build an investment portfolio today. We've got a special guest. His name is Mark Tapp. Mark's been in the mortgage and finance industry for years, but tell us a little bit about yourself.
Thanks, Matt. Yeah, actually, I've been a certified financial planner for a number of years. Been in the mortgage business for 15 years, and my specialty is actually helping families grow wealth through home ownership.
Excellent, excellent. Well, let's share a little bit of information. We want to talk about the investment loans. So, first of all, something that I hear quite a bit is, why is it that investment loan rates are higher than the owner-occupied rates?
That's a great question. And actually, the interest rates for investment properties and primary residence homes are exactly the same. The difference is the fee that Fannie Mae and Freddie Mac charges for an investment property, and that fee can range anywhere from 1 3/4% to 3%, which means on a $100,000 loan, you could pay anywhere from $1,750 to $3,000 for that loan. So what happens, most of the time people don't want to bring that extra money into closing, especially investors, so they increase their interest rate so that the lender can pay those fees for them.
And less closing costs always sounds better. You know, question number 2 is, what are the financial reserves that are required to be able to do an investment property or an investment loan?
Yeah, the reserve requirements are actually different for investor loans than they are for primary residences. An investor needs to have 6 months of principal and interest, taxes, and insurance in an account that's liquid. So let's say the monthly payment on that new home is $1,000. They've got to have $6,000 in an account. Additionally, if they have other properties, they've got to have 2 months of reserves for each of those properties.
Good deal. Now, down payment requirements, obviously those are going to be different. What are those look like for an investment loan?
An investor can get into an investment property for as little as 15% down. That's through the use of a little known secret. Fannie Mae and Freddie Mac will allow a 5% second behind their first. So if you can't find that second, you've got to come in with 20% down. But if you can allocate that second, you could either get it from the seller or another source, a bank or something like that, and you could do it with as little as 15% down.
All right. Now, last question. What percentage, how much of the rental income can we use for qualification?
Yeah, because there isn't a history of receiving that rental income, Fannie Mae and Freddie Mac have a guideline that says that only 75% of that income can be used in qualifying somebody. So we actually, when we do the appraisal, we do a market analysis that tells us what the expected rent on that home is. So let's say it's $1,000. Now we can use $750 of that to offset the mortgage when we're qualifying you for that mortgage.
Investment loans are key. These are something that you're going to need to deal with, especially as you build a portfolio. If you guys would like more information on the financial aspect of it or investment loans, contact us at homesforsalesupersite.com. Just put Mark Tapp, that's T-A-P-P, in the subject line. We'll make sure that we get you connected to him. Once again, as always, this is Matt for homesforsalesupersite.com, and we thank you for watching.